Hello, hello, hello. Test, test, test. Can you guys hear me okay? Make sure these streams that I'm monitoring aren't going to feedback here. Audio seems good. Sorry, the stream's running a little late. I got out of training late and I had food delivered and it happened to arrive at 10:15 on the fucking dot. So, in between 10:15 and 10:18, I was trying to shove an entire panini down my throat. So, here we are. What kind of mic do I use? I use, I'll tell you the exact model number right here. It is an Audio Technica ATR 2100. It's pretty affordable. It's like, I think it was like $50, but I think it sounds pretty good. It captures the low ends very well, and it's very directionally, it captures the sound directionally, so you don't get like ambient shit. Anyway, let's go ahead and talk about the stock market. So before we talk about any hypotheses of the long-term ramifications, I just want to go through and talk about the facts here. Okay, disregard Lockheed right here. That's just a little bro right here. First, let's go ahead and look at the Dow Jones on the daily scale. Okay, so here's the daily. Yep. Okay, we got my Wacom tablet here, and we should be in business. Oh no, we're not in business. Can you guys see this? Man, I've been fucking with the inputs, and I think in order for me to draw on this, I don't think you're gonna see this. You don't see that. Okay. 1 second. Let me mess with this real quick. We'll do it without the Wacom tablet. I'm a wreck. Okay, so first and foremost, in case you've been living under a rock, Dow Jones just made a new all-time high on Friday, and let's go ahead and make this little channel dark. So we're gonna talk about this through the lens of Wyckoff theory, and talk about what some of the ramifications are. You can only see crypto. Oh, whoops. Let me go ahead and change that real quick. That's weird. Why can't you see crypto? That should not be the case. 1 sec. Sorry, guys. Hold on. Let me finagle some stuff. This is terribly unorganized. I apologize. Yeah. I know. I'm on the crypto screen. 1 sec. Let me kill this real quick. I'm gonna throw you guys back on the liabilities statement. 1 sec. I gotta mess with some stuff here. Oh, here we go. That's what I want. Display capture. There we go. That's what we want. Okay, let me go ahead and take this in. Take this in. Take this in. And we should be in business here. Okay, let's go ahead and throw this back over here. Can you guys see that? Can you guys see stocks? Go ahead and close some of this ambient notification shit. You guys should be able to see Dow Jones right now. Yep. Right? Okay, sweet. All right, so now that I messed with that, so now I can use my Wacom tablet. So we'll be able to draw on here. Okay, so let's go ahead and talk about this market through the lens of Wyckoff theory, and we'll extrapolate from there. So can you guys see this? Yes, nice. Okay, so if we extend this line over here, let's pretend this is a horizontal line. We see we made a new all-time high for the Dow Jones, right? But it was not received very well. Oh, this is DIA. Let me go to DJI. This is what we want to see. Okay, so if we go to Dow Jones, we see that we made a new all-time high, and in order to do it, we gapped up. Well, that's not true. We closed a new all-time high. What was it, on Thursday, and we closed another all-time high on market close on Friday. And then Monday, Tuesday, and Thursday, we see these red candles coming down. Okay, so first and foremost, if you've been following my Twitter posts, we see that this little bro right here, let's zoom in a little closer so we can talk about this candle structure real quick. Okay, so here's this line right here is the all-time high, like that. Let's make that dashed line the all-time high, the previous all-time high. And now you see here that we gapped up to make this new all-time high, and it was rejected. Okay, so first and foremost, this setup alone is called an abandoned baby. It's kind of fucked up, but that's what it's called, abandoned baby. If you guys can read my chicken scratch handwriting, it's basically just when the market gaps up, makes a doji, and then gaps down, rejecting the doji. Okay, so this is one strike. So strike one. Strike one. Let's say AB, abandoned baby, or just say baby. Okay, which is just the gap up, doji. Right. Okay, so and then strike two, which is like worst case scenario if you're an equities bull, is this pattern right here called three black crows. Okay, and what it is if we look at it from a supply and demand standpoint, a Wyckoff standpoint, we see that basically the market does this, right? Okay, the market gaps up, or in this case, the first candle gaps down. But so the market goes here, and then it closes here. Okay. The next day, the bulls try to push it up again, so it gaps up again, but it closes down here. And then for the third day in a row, it gaps up again, and it closes a new low down here. So what this means is that no matter how hard the bulls try to push it up, the supply is the dominating force for this trend. Okay. Not only that, but let's put it in the context with this thing here. Okay, so there are two ways to draw a supply and demand channel. Okay, you can look at it like one is a supply-driven channel, and the other one is a demand-driven channel. Okay, this one right here would be a demand-driven channel because it connects the highs, and you extrapolate to the first low, and you get your first touch here. Okay, if you wanted to do the opposite way, it'd be like this. So we make our little channel here. We go boom, boom, and then we bring it up to the high, like something like that. Okay, if you want to be super generous, you could go here. Either way, no matter how you paint it, we're sitting right on the breakout and a return to the supply and demand channel. I personally think this is the way to do it. I think it yields more useful information. Sorry, let me redraw this real quick. Something like that. We'll extend that down to this point here and connect that to that, and there we go. So we see that typically you can think of the supply and demand channel as this, right? So when the market reaches the top of the channel, that's typically when supply dominates, and it pushes it back down, and then reaches the bottom. That's when demand dominates and reverses. So it kind of ping pongs up and down, you know, until ultimately we see something like this, right? This is one way to view an oversold market, and in our case, we gapped up big time. Okay, so we see here we cleared the entire boundary of this thing. We gapped up, right? We saw a shove. It popped a new all-time high, gapped up again, and that's when we got the abandoned baby. And now we're three black crows back into the supply and demand channel. Okay, so that's not good. This is a reversal pattern. This is also a reversal pattern. These together are a very powerful reversal pattern. Not only that, but given the context of this, this is especially bearish because we popped a new all-time high and we had two very powerful reversal signals pushing us back below the all-time high, right? That's not what we would want to see. We would want to see maybe find support here, but not just overwhelming supply dominating the market. So for 4 days in a row, we see supply dominating the market. Okay, so that sounds like shit, right? Let's go ahead and put it into context of something like a very common momentum indicator that my Discord likes to use is called the SMI, the squeeze momentum indicator. It's really good for high time frames. I think it works better than MACD on high time frames. It's not very good on low time frames, but high time frames, it's very nice. And we can see quite clearly that we're seeing just heavy divergence on this high. Okay, and the past few times that we've crossed red after divergence, we had a pretty significant pullback. Okay, so that within the context of this trading range sort of thing yields me to believe that we're going to see a pretty strong reversal. Okay, so that alone is pretty bearish. Let's go ahead and look at the S&P 500. Okay, so the same sort of deal. We have the supply and demand channel, and different than the Dow Jones, the S&P couldn't break the top of the channel. Okay, so it tried to get to the top, it couldn't do it. Tried again, was even further from the top, and now we're sitting right on this midline. We see here we wicked it perfectly. And this is, if we look, back throughout the past few months, this has been either support or resistance. So we see here, it was a little bit of resistance and it popped up, and it provided support, and it broke down, was a little bit of resistance, and it was support, and now it's been support since July. Okay, so it stands to reason if you're looking at the Dow Jones, because yes, the S&P 500, the Dow Jones, don't entirely operate independent of one another, because they're all intertwined in the equities market. So it stands to reason, I would think, we're going to see a retest of this all-time high, where this blue line is here. And if I'm looking through my crystal ball here, I would have to guess we're going to see something like this. We come up, right, make a high, come down, test here, retest, making a nice head and shoulders, and then a breakdown through the support, especially given where Dow Jones is. Okay, and now again, let's go ahead and look at this is the SMI down here, squeeze momentum indicator. We see just disgusting divergence on this whole way up. It's been diverging horribly. So it is not displaying bullish characteristics right now. It is a supply dominated market, and it's struggling to stay afloat right now. Okay, so let's go ahead and look at a couple other things. Okay, so this is the daily candle. Keep in mind it is the 26th of September. Which means that the monthly candle closes at the end of the week, and so let's go ahead and look at what the monthly candle looks like. Right, so 1 month. Well, would you look at that? A big fat fucking doji. Not only that, but the monthly trend is diverging on the SMI. Okay, so that alone, you could say, okay, well, I'm looking through here. I see a few dojis. Yeah, dojis don't necessarily guarantee a reversal. It's more of a sign of market indecision, and that's fair. But if we look at something like the Bollinger Bands, for example, we see something very interesting here. Right at the top of this doji is a beautiful M top, which is a powerful reversal signal for the Bollinger Bands. It's a very highly reliable signal. Okay, so if this closes a doji, these in a few days when the candle closes and we open a new candle, this will undoubtedly curve these B bands over, or at least start to flatten them out. As you can see here, the BBW, the Bollinger Band width, it's no longer expanding, and it's kind of on the contracting side of things. Let's go ahead and zoom in a little bit so we can see. Okay, so we can see it's hard to tell when you're looking at the Bollinger Bands what they're actually doing, but they are curving. The BBW is curving, and you can see here that it hit the apex right at the previous all-time high here. So we go down here, hit the apex of the curve, and now we're kind of just way over extended here. Right with this doji, right with the Dow Jones seeing the strong reversal signal. So that stands to reason it's very possible that we're going to see a monthly M top, which, if you're familiar with Bollinger Bands, first price target of the monthly M top is going to be here, and the second price target is going to be here. Okay? So then you could sit there and say, well, okay, most conservatively, it's gonna be here, right? But then again, let's go ahead and look back at the Dow Jones. Okay, let's go back to this daily shit right here. Let's get rid of you. Let's go back to Dow Jones here. Okay. If we see the S&P pull down to the midline, well, what does that mean for Dow Jones? Because again, it's diverging. We're seeing this strong reversal signal. It's also not guaranteed that the reversal signal is a strong continuation, so that's something to keep in mind. But what happens when we reverse and we come down here, right? And we come down here. Well, then this starts to look like a giant fucking double top. And let's go ahead and let's go ahead and look at some historic examples of how the S&P 500 has reacted to monthly M tops. Okay, so here's our monthly M top, which it stands to reason it's going to close as monthly M top. Let's go ahead and look at some examples here. So here's a monthly M top. Well, look what happened here. This was right around the housing bubble popping, but we see that at the very least it went down to the lower bands, and then the economy shot the bed and it kind of just kept going. Okay, so that's one example. Another example is, well, that's one of the few examples we can find. So this is basically the same situation we're looking at over here, except I think this is actually worse because the doji's tighter. There's a lot less bullish spread than it is down there. So, okay. What else can we look at to get some information? Let's go ahead and look at the chart of gold, because gold tends to move inverse of traditional investments like equities and stuff. Well, if you look at gold is making a big fucking double bottom on the 4 hour. Okay? If gold double bottoms right when the Dow Jones is double topping / making its 3 black crows set up, well, we could see gold see a rally, right? And the price target of this thing, if you're looking at the macro trend, it's not a huge reversal relative, right? It's a 4.5% move, or 4.4% move, 53.54. We project this up. We would see something testing this level right here. Something like this. Something in here. Right? Anyway, so these are just the facts here. This is what the charts are showing. This is what this is the evidence we have to build a case for something. But the fact that Dow Jones is poised with such a bearish reversal at the top of its all-time high at the same time that the S&P is making a monthly M top reversal. And oh yeah, by the way, let's not forget FANG. Okay, for those of you who don't know, FANG is just an index. You take Facebook, Apple, Amazon, Netflix, and Google, and oh my God, I think my neighbor. I apologize if you can hear my neighbors outside, but they're having a good time apparently. So let's go ahead and look at FANG here. Okay, so FANG, again, if you've lived in a bubble, unless you've lived in a bubble, FANG has been on a parabolic rise, right? Well, earlier in the month, we've finally violated that parabolic rise. And we see here, we finally broke out. So here's all the little different extensions. Here's a curve. And now we've violated this parabolic rise in the form of a fucking head and shoulders. Okay, so we've got a complex, it's called a complex head and shoulders. However you want to draw it. You can draw it like a normal one like that, where this is the shoulder. But either way, we've now violated this parabolic curve in the form of a head and shoulders, which is very similar to what Bitcoin did, right? Bitcoin violated its curve, and as we know from Bitcoin, parabolic curves like to retrace between 80 to 90% of its rise. Well, FANG looking like this at the same time that the Dow Jones is looking like it does, and the S&P 500 looking like it does, it stands to reason that the equities market is on very shaky ground, right? It does not look good. Now, that doesn't mean go out and sell all your holdings. That doesn't mean go ahead and just like go balls deep in gold, because, you know, as we all know, stocks move slower, and if it does, you know, quote unquote crash, it's not going to happen overnight. And the bottom of something like that would take a year or two to actually be realized. So, you know, you have time to investigate. But as time starts to progress, we get more and more pieces of evidence to support our ideas, right? So we'll know a lot more what happens on Monday when the new monthly candle opens for S&P 500, and when we see how the market closes and opens for the Dow Jones on the monthly candle, and again how FANG reacts to the Dow Jones and S&P behaving the way they are. So we can't definitively say one thing or the other, but the evidence is quite damning for the bulls here. Okay, questions? Anyone have any questions here? What do you? Yeah. So someone asks, what do you think about the huge volume, the huge daily volume last Friday? That is another reason why it does not look good. So look at this huge outlier in volume here. That means that no matter how hard the bulls pushed, they couldn't make any headway. Look how huge this volume is on the Dow Jones. That's monstrous. Okay, it basically is only rivaled by the bottom of this gigantic drop. That means we popped a new high, you know, and everyone's like euphoric, and it didn't go a fucking inch. That is, in Wyckofian terms, high effort, low result. Not good. It's very, very not good. You mentioned a correlation between Bitcoin on Twitter. Could you expand on that? Yeah. So, very simply put, when did Bitcoin crash? When did it pop? Right? Like January, like the beginning of January. Well, the equities market popped a couple weeks later, and they bottomed at the same time. So I think Bitcoin bottomed on February 3rd or something like that, and the equities market bottomed February 9th. Right? They had a retest on the same day, April 2nd, somewhere in here, end of March. And Bitcoin had another retest at the same time that the equities market did, right? So here's Bitcoin. Look, bottom at the beginning of February, another bottom at the beginning of April/end of March. These markets are moving together. The major moves are moving together. It's undeniable. Like, that's not a coincidence that, Bitcoin finally pops on the beginning of January, and the Dow Jones pops a couple weeks later, and they bottom at the same time. That's not a coincidence. If there is a crash, is it more likely after a normally bullish holiday season? I have no idea. But here's the thing, is that the Dow Jones and S&P just set records for the longest bull run in history. And typically recessions take place every 6 to 8 years. And one argument to be made is that, so, you can see here, right? This is when Trump got elected right here. Beginning of November, and the stock market just fucking took off, right? So it's very possible that Trump's election delayed an inevitable recession, because they periodically happen every 6 to 8 years, and that means that the reaction from a delayed recession is going to be way harder than one that happens on a normal cycle. Because it's more extended, and the snapback's gonna be harder. So I'm not saying we're gonna go into a recession or anything, but if ever there were a catalyst to do so, it would be now, right? Could you please look at U.S. oil? Don't know what to make of it lately. No, I will not be. I'm only looking at stocks today, and I'm not going to go through other stocks. I'm just talking about the macro picture of the indices. Oh, yeah, you're right. I'm sorry. I said that's when Trump got elected. That's not when he got elected. You're right. You're right. Might be. You're right. It would be here. You can see that the stock market. Yeah. Sorry. I was looking at the wrong thing. The stock market took off when he got elected right here. Boom. Crazy high volume, too. How about DXY? Yeah, so DXY, I don't really, honestly, I don't really like looking at currency indices on large scale, because I don't know. It just seems weird. It seems weird to me to do that. But I mean, if we're looking at the same scale, the dollar index is making a head and shoulders right now. The question is, I guess I'm a bit out of the loop, but why, without going into too much detail, did the stock market take off so much when Trump got elected? It's because one of the platforms that he got elected on was deregulation. Uh, was for deregulation, right? And when things are deregulated, typically that means that things become cheaper because you don't have as many people running, people employed to do tasks. And so there's more money to invest in the stock market because people aren't being taxed as much. So he was running on a platform of like low taxes and deregulation, which is good for Wall Street guys because then all these people, these hedge fund managers and people, they're like, okay, well, I have more capital to invest in the market, and so it takes off. Question from James Smith. I'm no expert on correlation, but from the past few months, haven't Bitcoin and Dow Jones moved more inverse from one another since the all-time high? So they move together uh, on big moves, on moves that define a trend. For example, finding an all-time high, finding a low again to reassure support. But on like day-to-day moves, they don't move together. It's when it's trend defining moves that they move together. And it makes sense because investors are investors, right? And if the argument is this, if you're one of the big wigs and you've got a huge hedge fund, or maybe you're an investment bank like Goldman Sachs or Morgan Stanley or whatever, right? And you've got a fuckload of money and you're scared that the stock market is going to crash, what is the first thing you're going to dump? You're going to dump your most volatile assets, i.e. crypto, right? So they drop 2 weeks before. So once they fully unload all their supply, then they move on to stocks, right? And it's very funny that the crypto market is looking so bullish right now, right at the same time that Dow Jones fails to continue its all-time high trend. So it stands to reason that maybe, this is a personal theory of mine and a couple of people in my Discord, that maybe the reason why alts and everything looks so bullish is because we're actually going to see a run to a new all-time high on Bitcoin. And it's going to do something similar to what the Dow Jones did. It's going to pop a new all-time high, and it's going to just shit the bed, and it's going to be a giant exit pump. But that's a bit crystal ball-y at the moment, so take that with a grain of salt. What trading platform to use for trading equities? I trade on one broker because they use Bitcoin as collateral. So it's and also they don't use there's no KYC process. So you deposit Bitcoin, you withdraw Bitcoin, and all your payouts are in Bitcoin. So there's a referral link in my video description. Check it out if you're interested. But it's pretty quick. You just sign up, and you can have funds on the exchange basically in minutes, and you can get them off in minutes. So it's pretty easy. And in the meantime, while you're trying to do that, if you're interested in staying up to date on this stuff, you should check out my Discord at bitcoinschmitcoin.com. There's a coupon code right now for Bull50, and you can get 50% off. So, yeah, check it out. I'm in there all the time. Everyone's in there all the time. Really good group of people in there, and everyone's very professional. So. Can you draw a Wyckoff schematic on FANG? I don't think you really need to. It's just a head and shoulders. You know? You know, head and shoulders is just a specific type of distribution. You know, you got your buying climax, your automatic reaction, your secondary test, your up thrust, and now you're doing last point of supply here. Are you going to talk about Bitcoin? No, I'm not. This is just an equities only stream today. Go ahead and trim some of this fat off this image here. There we go. It's good. Is Amazon still parabolic? I'm currently short on it on Amazon. Because it's making like a head and shoulders kind of thing. But here's a supply and demand channel. But yeah, it is still, by all means, parabolic. There's nothing non-parabolic about it, but it looks like parabolic blow off here. And it looks like it's making a top. You can see very clear divergence here on the daily SMI. Brutal divergence as it popped out of the top of its channel. But yeah, it's actually been, oops. If you're on a log scale, it's been in this really crazy channel here for years. Right here. And it's been respecting the top, the bottom, and the midline very well. And most recently, we popped out of the top of it. So it'll be interesting to see if we can keep finding support here. Because if not, it'll be GG for Amazon. Especially if FANG crashes with the Dow Jones and all that stuff. What kind of leverage does one broker offer? On Dow Jones, they offer 50x leverage, and on S&P, I think it's 20. Do you guys have any questions about any of the stuff that I just talked about? That is non-crypto related? Someone on Twitch asks, what am I up to these days? You know, man, just hanging out. What about you? You were pretty clear in your explanations? Oh, okay, well, good. Schmidt, did you watch the Trump press conference today? He talked about putting tariffs on Canadian auto. Do you think this could have major impacts on the stock market? I did not watch the press conference today. I'll have to take a look. I'll have to take a look. I don't know. But, you know, these Chinese tariffs, you know, they're scaling in, and by the end of the year, they're going to kick up to 25%. And that would be the perfect time for S&P to complete that head and shoulders. Because if it does, you know, if it ends up making a head and shoulders here, it's going to take it's going to take like a couple months to complete. Because these are daily candles. So, you know, maybe it takes like another month and a half. And then we start seeing signs of weakness hitting the market. You know, we'll have to take it day by day. But traditionally, you know, whenever the monthly candle closes, the daily candles have a lot of fuckery. So, but for me personally, on the market open tomorrow, I'm gonna be shorting the shit out of the Dow Jones, because I think what's gonna happen is, you know, maybe we see maybe a gap up tomorrow, or maybe we see a rally by midday, and I'll be looking to short that. Ideally, I'd like to short the retest of the top of this channel. That would be ideal. So if you can get a retest up there, I'll be looking to short there. But this 3 black crows with the abandoned baby setup, that is just like begging to get shorted, especially into the monthly close, because that means that the monthly is going to be just obliterated, you know, which, by the way, is currently diverging on the SMI. So, is this making an M top too? Oh, would you look at that? The Dow Jones is also making an M fucking top on the monthly. Neato mosquito. Here, it made an M top here before the big reversal of, you know, the housing market reversal here. But here's the thing too. So if this closes up here and we get a monthly M top set up, then that means that the next, you know, the first price target would likely be here, which means that's basically forming a double top for Dow Jones. It's just not looking good. What about the idea that the Dow Jones is a massive cup and a correction would just create another handle? What? Not sure I understand what you're saying there, dude. You're saying like this would be the cup? I mean, I don't see any reason to think that. That's not typically, like, the volume doesn't line up. I mean, I guess it's possible, but I think that's wishful thinking at this point. Especially with those monthly M top setups. I mean, maybe. Who knows? Could be. But at the very least, it's going to make for a good short in the meantime. You know? Anyway, if you guys don't have any more questions, I'm going to go eat my cold sandwich right now. That was originally hot when I got here. But in the meantime, I'll be hanging out in my Discord, which you're welcome to join, with the coupon code BULL50. Go to bitcoin.com to do that, and sign up today. For now, I'll be posting charts and stuff as the market progresses, but I'm not. I'm not very hopeful for the outcome of this at the moment. Especially with the fact that we're like way overextended on the recession cycle, and it's just not looking good. It's a very good timing for a nice big fat short. I kind of feel like Christian Bale right now in The Big Short. Just sitting there in front of computers listening to death metal and screaming at myself. Anyway, I'll be in my Discord and on crypto and on Twitter. But in the meantime, you guys have a great night or a great morning wherever the hell you are in the rest of the world. And maybe I'll do an update next week as the monthly candle closes, so we can talk about how things are looking. But I'm going to get off and go eat my sandwich now. Have a good night.